Hello guys, welcome into this video. In this video, I'm going to show you how to trade Volatility 75 index using support and resistance. This is going to be a step-by-step tutorial from how we do our market structure to how we plot our support and resistance levels and how then we go to the lower time frame and look for our entries. So even if you're a complete beginner, after watching this video, you'll be able to trade Volatility 75 index successfully using this strategy. So the first thing that you want to do is that you want to start from the higher time frame. From the higher time frame, this is where by now we are going to do our market structure analysis. So when it comes to market structure, guys, there's something that you need to understand. So we have intraday structure and we have the major structure, which is the highest time frame. So my major structure is going to be the highest time frame that I'm going to be starting to doing my analysis. And then the minor structure, this is going to be intraday structure. Right? So the first thing that you want to do is to find the overall direction of the market. So looking at this piece of price action that we're having on the daily time frame here, we can see that the market here, if we start from this point here, we can see how the market has been pushing upwards to this point right here. So which means from this phase here, the market was just in an uptrend. So when the market was pushing upwards right here, it ended up changing the market direction from bullish to bearish because we started seeing this bearish movement is starting to break the higher lows of this bullish market. So we started seeing the market now printing a bearish market from here up to this point. From this point now the market changes again and it started giving us higher highs, higher lows, higher highs, which means this was already an uptrend market. So anticipating that the market is going to continue in an uptrend, right, we saw that this push to the downside, it failed to break this low. So which means what we're expecting right now, according to the current market structure, which is an uptrend, we're expecting that the market is going to go upwards like this. Why can we say that, or why do we have to say that? This push right here from this point right here and all the way the market to the downside right here was given an opportunity to try and test this zone right here, which is this point right here. It was given an opportunity to either break below here or either respect this particular level, but it failed to break below here. This is the reason why we're anticipating that since it failed to break below this particular point here, the market is going to continue with the current market structure, which is to go upward. So this is the overall view of the daily time frame of what we're expecting to actually happen in the market. So since we can now actually see that this is an uptrend that we're having here on the daily time frame, now we are done with the doing and finding out our major structure, how our major structure is actually moving. Now we want to go into the intraday and have a look on how the market is moving, because on the intraday, this is whereby we are going to get our opportunities to get into the market. Coming to the H4 time frame, we understand one thing, that this market here, according to the major structure, which is the daily time frame, we're supposed to go higher and higher, right? And we understand all these levels that we're seeing right here, all these levels is up to be broken. So we understand that the price is going to break this point here at some point, right? So now it's actually important to find out how the intraday market structure is moving. You can see how the market was pushing downwards from this point right here, and it was making lower highs, lower lows from this point to this point right here. And suddenly when the market pushed to this particular point, it started making high highs. So which means that the market or the intraday structure has changed from bearish, it is now going bullish. So we can see how the market was making higher lows, high highs, higher lows, high highs from this point. It made another high low here and then made a high high from this point. Once again, made a small retracement to this particular zone right here and the market pushed. So according to the intraday structure, we are still bullish, and the major structure, which is the daily time frame, we are also bullish. So which means if we have those two time frames agreeing in terms of the direction, we have a powerful opportunity for us to actually make some money. So what we're expecting right now is for the market to make a high low so that we can go upwards. The market here was just moving something like this. So the market will make a push and makes a retracement, make a push to the upside, and make a retracement once again, and make a push. This is how the market moves. So if we're having a market which is looking like this, how now are we going to have an opportunity to get into the market? So what are we looking for? We wait for the market to make a push and then a retracement, then we get into the market. So when looking for the best areas of support and resistance, you have to understand one thing, right? So in an uptrend, we can understand that the market moves like this. It makes a push and then it makes a retracement, right? And then it makes a push. So whenever we have a push like this, right? When I'm going to be drawing my key levels or my areas of support and resistance, I'm looking for an area where the price has been rejected. So this is the point that I'm looking for, where the price previously has found resistance at some point. So this is my first preference when it comes to finding an area which is suitable for the market to actually trace, and then found a very good opportunity to go upwards. So we can understand that this zone here, at this zone right here, at this particular point, the price has found resistance. So this is a roof, so which means the price couldn't pass by this particular point, but in the future it ended up breaking up. So if it is going to retrace, guys, what I'm expecting is that the market is just going to come to the same zone. It has been pushed down and found resistance, and at the same zone it is going to find support to go upwards. So what I want to do is that I will do my quick market structure, right? This will help me as well when I'm drawing my key levels. So this is what we're having, right? So my first preference when it comes to the key levels, I'm just going to find an area where the price has found what? Resistance. And that area is a very good area, or a very potential area that we can find support once again. So this is what happened at this particular point. So this is what you're going to be continuously doing, right? So I'll draw from this previous point right here, see how the price come again to our level and the price pushed upwards. If I'm going to draw another zone, I'm going to draw it somewhere right here. This is where I'm going to put another zone right here, because what we ended up having was this point here, which acted as a resistance from this point right here, and is the same point where the price is going to retrace into at this particular point, right? So this is how you spot this perfect zone. So what are we just doing? We are just waiting for the market to make an upward movement, and then we can plot a zone right here. So let's say we're having a market which is doing like this. This is how we could plot our zone. So we're just going at the previous highs, and then we're going to draw a zone right there, and then we go to another previous high and we draw a zone. So we are anticipating that this previous structure here, which is the high point here, can act as a nice area of support when the market is going to make a retracement. These are the potential areas that we can actually take our trade to go upwards like this. So we have drawn our key levels, and I've showed you how to spot and how to find the best areas of support and resistance in the market. And these are potential areas that we'll be looking for to get into the market. So how do we then enter the market when the market retraces back into the zone that we have plotted? So this is what I'm going to show you. So to do our entries, what we prefer to do is that we want to go on the 5-minute time frame. So I'm just going to shift to the 5-minute time frame right here. So coming to the 5-minute time frame here, we're just going to start with this point. How best could we have entered the market from this area? When it comes to entries, we have now find that this is the zone that we want to enter the market, to buy the market, right? So this is what you're going to be seeing much happening in the market. So you're going to see on the 5-minute time frame, which is the time frame that we're going to be using for entries, right? The market is going to be printing its own structure on 5-minute time frame. So this is the structure we are going to be monitoring a lot, right? So since the market is going down on 5-minute time frame to the zone, and we are watching this market structure here, everything that is happening, we are watching, and then the price touches the zone. The moment it touches the zone, we are watching the market in terms of the market structure that is printed on 5-minute time frame. And when the market pushes upwards like this, so it has breaked the 5-minute time frame structure. So you see what happened right here. The previous lower high point right here of this uptrend has been what? Has been broken, right? This is a break of market structure. So if I'm going to put a trend line right here, guys, you're going to see something like this. This is what you're going to see, right? So what has happened here? Number one, our trend line has been broken, but the most important thing is the structure, which is at this point. So there has been a break of market structure on 5-minute time frame. This is what we are looking for. The moment we have that break of market structure, what we are looking for now is that we don't want to complicate things. We are just going to find and draw the best areas of support and resistance that you can find in this range, from this point right here to this area here. And so let's say this is the zone that we have found. So now what we're just waiting for is for the price to come back to the zone so that we can buy the market. As simple as that. This is what so we'll be taking our buy from this point right here and our stop loss just below the zone, and then we are targeting the highs. And most of the times this is going to be a very nice swing trade. So with a small account, we'll be able to grow that small account very easily. So looking at this point right here, so you can see that this market here, it was making lower highs, lower lows, and then this push right here, and the market made the last lower low. And then boom, what happened right here? We have had a break of market structure, this point right here. This is where we are having our what? The last lower high point, and the price pushed upwards. This is the point where the price is broken. So since the price now has new structure points, right? This is the last lower low that was made, and this is the what? And this is the high that was printed when the price breaks the structure, this bearish move structure. So what we're going to do now is to find the best areas of support and resistance that we can find. So coming from here, you can see that I think this was a potential area. So now what we just wait for is for the price to come into our zone, because in terms of market structure, in terms of market direction, we have actually, even if I draw my trend line like this, you can see that this trend line has been broken. But the most important thing is the structure, the lower time frame structure, the 5-minute structure has been violated. From bearish, it is now bullish, right? So we're just waiting for the price now to come into our potential zone so that we can now take our buy trade. So I'll take my trade from this zone, my stop loss a little bit lower, the zone right here, okay? And then we'll take our buy trade, hoping that the market is going to break this previous high right here to go upwards and make a new high. So this is what we ended up having right here till this particular section right there. So this is how we could have actually entered this entry right here. So let's go on another example once again. So looking at this right here, we can see that the market right here was actually bearish, and we are monitoring the 5-minute structure. It touched the zone and ended up a little bit weakening the zone. So if you look in H1 time frame, this whole move that is down, this scale of down, it is just a wick. But on the lower time frame, you're going to see this is actually a piece of price action that we're having here, right? So we can see from here how the market was pushing down, right? We saw the market was pushing down right here, and it ended up breaking what? Ended up breaking the structure, which is the bearish structure, and creating a new potential structure at this particular point. So we can see from here that since we have a break of market structure from this point right here, when the price pushed up right here, now what we're just going to do is that we are going to find our potential zones that we can now enter into the market, right? So if I'm to draw any zone in the market, so I'm going to start from the left here. You can see how this point has been wigged. So I think I'm going to draw a zone like this. This is the first zone of preference that I can use for my entries. And I'm going to look to the left again and see if I can find another zone. You can see this was another potential zone. So these are the two zones that I'm having here. And I'm expecting that the market is going to come and I'm going to take my entry. Of course, the first preference is going to be to the first zone right here. And this is where I could have taken my entry. So I'll take my entry from this point right here, and then my stop loss, right? somewhere down right here, right? And then I'll take my trade to the upside. So since you can see, guys, my stop loss here could have been a little bit small. I don't know which area I could have placed it. So let's say you take this trade, right? And you put a small stop loss. Maybe you're going to put a stop loss like this. You see, the price was going to take you out, right? The price could have taken you out right here. But the importance of actually defining your stop loss, where you're going to get out of the market. So even if this trade take you out, it wasn't going to take you out with a lot of money or a lot of losses, right? You could have just ignored that loss, and then you take your trade from the second zone that we plotted, right? So which means if this zone has been violated, let's say we take a loss from this point right here, and which means that we are going to what? Take our entry from this point. And then what happens right here? You put a stop loss down here, and then you target the highs. Let's look at another example right here, right? So looking at the price right here, you can see how the market has been pushing down like this, and we saw the market, the market did this and then met like this. So from here now, from this point, this was the last structure high, lower high right here. So this is the point where we have a break of market structure on this lower time frame. So which means that we're now just going to look for a potential area whereby we can now place our trade. So from me looking from the left, this was the most perfect zone, and this was the only zone I was actually going to be taking my trade from. So I'll be taking my trade from this point right here, my stop loss a little bit lower below this 2 points right here, my stop loss down here, and then I'll be targeting the highs. See how, guys, you can actually take these perfect trades, right? So look at how this big move, guys, that you could have caught all the way from down right here, and you just hold in the market and taking your trades on 5-minute time frame. And taking your trades on 5-minute time frame is going to give you an advantage. Why? Because your stop loss is going to be very, very, very small, but your target or your profit is going to be very, very, very big, because you have an overall view of the major structure and the intraday structure, so you understand where the price is actually going to go.